Good afternoon, everyone. Thank you so much for coming to the BioForward Wisconsin Tax Incentives R&D for Activities lecture. I'm Jordan Lamb. I'm the attorney and the lobbyist for BioForward. I'm from DeWitt, Ross & Stevens law firm in Madison, and I've been legislative counsel for BioForward for about 10 years. This afternoon, we have two representatives from the Wisconsin Department of Revenue, Robert Kennedy and Nathan Weber, and Michael Boenzi from the accounting firm Grant Thornton, and Grant Thornton is sponsoring this part of our meeting today. I'm going to introduce all three of the presenters and then turn it over to them for presentations, but because we have a small group, they will welcome your questions at any time. You just raise your hand and they will clarify or answer the question. Robert Kennedy is currently a sales and tax specialist with the Administrative Technical Services Unit at the Wisconsin Department of Revenue. He's been employed at Revenue since 1992. Prior assignments within the department include 5 years as a field auditor, 3 years assigned in field audit technical services, and 6 years as an office auditor in the Farmland Preservation Credit Unit. He is a CPA. Nathan Weber, also from the Department of Revenue, is a large case field auditor. He has worked for the department since 2000 after graduating from the University of Wisconsin-Eau Claire. He's currently Research Issues Specialist for the Field Audit Section. He was also the Pass-Through Entity Specialist for several years and has trained all new auditors on Wisconsin tax laws since 2002. He's also a CPA. And Michael Boenzi is the Midwest Region R&D Practice Leader and Corporate Strategic Federal Tax Services Senior Manager at Grant Thornton in the Chicago office. I think I should get extra credit for saying all of that. That was a lot. Michael's responsible for leading the implementation of a wide range of advanced tax planning strategies for clients. He's also the Midwest Region's Research and Experimentation Tax Credit Practice Leader and is responsible for directing the region's implementation of research tax credit studies. He's one of the leading professionals in the U.S. on implementing and defending research tax credit studies. So we've got some great experts here to go over the credits and answer your questions. And first up is Robert Kennedy from the Department of Revenue.
Okay, good afternoon, everyone. First off, I'd like to thank Jordan and Mike and Kathy Collins and BioForward for putting this together and allowing us the chance to come here and speak to you about the research credit issues and the sales and use tax exemptions. As Jordan said, we've got a small group, so I encourage you just to ask some questions as we're going along. I just have a brief PowerPoint here. I'm going to highlight some of the points with the sales and use tax exemption for qualified research. I've got some material here. Now, did you guys get copies of or is this going to be available later to you? Okay, it's going to be available. So we've got our contact information on here. What we're going to cover today, we're going to talk about the sales and use tax exemptions. Nate's going to talk about the Wisconsin income and franchise tax credits related to qualified research. And as I guess more with the discussion, we'll get into some of the details about what are qualified research activities, what are qualified research expenses. Nate's available to talk about the audit process, and lastly, what records need to be maintained relating to qualified research activities. A little background on the history of research tax credits in Wisconsin. In the federal government, originally the federal government enacted the research credit back in 1981 to help promote innovation, encourage job production in the United States, help keep manufacturers innovating their products and to come up with new products. Wisconsin followed suit in 1984. We kind of piggybacked on the federal credit. We expanded the credits in 2007 and again in 2011 with some additional research credits. And beginning effective the first of this year, some sales and use tax exemptions took effect. We do have some fact sheets available up here at the front relating to the sales tax exemption and the super research credit. And Nate also put together just a little a sheet that has a lot of citations to applicable laws and regulations and other reference materials if you'd like that. So with sales tax, what do we have? What's exempt? Or did I skip one here? Yeah. We have 2 exemptions relating to qualified research activities in Wisconsin. The first is available just for conducting qualified research. So in addition now to perhaps getting an income or franchise tax credit, you can also get a sales and use tax exemption on certain property that's purchased and used in conducting qualified research in Wisconsin. The second half of the exemption relates to firms that raise animals that will be sold for use in qualified research. And so for that group of people, if they meet certain requirements, certain property and items that they buy and use to raise those animals, they can now get, those purchases can be made sales tax exempt. Okay, with regard to the first sales and use tax exemption we have for conducting qualified research, the exemption covers machinery and equipment and attachments, parts, and accessories that are used exclusively and directly in the qualified research activity. There's also a general exemption for basically a catch-all. All other kinds of tangible personal property that are consumed or destroyed or lose their identity in the qualified research activity are also exempt. And the exemption does include fuel and electricity. Our definition of tangible personal property in Wisconsin for sales and use tax purposes specifically includes fuel and electricity, so that's covered as well. The qualifications, what do you need to have to do to qualify for these exemptions? One requirement is that the purchaser must be engaged primarily in biotechnology or manufacturing in Wisconsin. And in this case, primarily means more than 50%. And also the property must be used exclusively and directly in conducting the qualified research activity. We have some examples a little later to kind of give you an idea what's exclusive and direct use. Again, just a little bit background on why we have the manufacturing and biotechnology requirement. If you're looking at what's qualified research, a number of people who aren't manufacturers or who aren't engaged in biotechnology, they could qualify for the research credit. And the idea here was to limit the scope of the exemptions to just those classes of businesses. When you look at how do you go about determining is my business primarily engaged in manufacturing or in biotechnology in Wisconsin? The first thing to keep in mind is for sales tax purposes, we're looking at each individual legal entity for sales tax purposes. So if you have a corporate structure where you have a parent at the top and there's a number of subsidiaries, you would just look at each subsidiary and what does that subsidiary do in Wisconsin. And if you have an entity that has LLCs where the entity is the sole owner of the LLC, again, for sales tax purposes, we follow the same thing for income tax. If the LLC is disregarded for federal or state income tax purposes, it's also going to be disregarded for sales tax. So if you had say a subsidiary in Wisconsin, it's a manufacturing subsidiary, it has an LLC that it solely owns and it's a disregarded entity, you'd have to include the activities of that LLC to make this determination as to whether or not that entity is primarily engaged in biotech or manufacturing in Wisconsin. What types of measures can you use to determine? Probably the most common one would be sales revenues. If you're a manufacturing entity here in Wisconsin and you're actively engaged in selling those products, probably the sales revenue is the most common one you'd use. In the case of some startup companies that perhaps don't have any products to sell or have very marginal revenues coming in, you could use other means to determine what their primary activity is. Investment in plant, property, and equipment, maybe the amount of expenses they're devoting to different activities. But keep in mind, this assumes that you do have more than one activity. So if all you have is a manufacturing plant in Wisconsin and maybe some support personnel, salespeople, office people. Probably your only activity here is just by default is just manufacturing. You're really not doing anything else in the state. Here's some examples of whether properties used exclusively and directly in qualified research. We actually got this question earlier in the year. A company indicated that they bought certain types of cancer cells and they bought them in bulk. And so they needed to keep them frozen in liquid nitrogen until they were ready to use them in the research activities. And we determined that the liquid nitrogen wasn't used directly in the qualified research activities. So the liquid nitrogen in this case was taxable. Animals that are purchased by a research company, but they're used in a project where that research is being funded by a third party. They're not used exclusively directly in qualified research. And maybe we'll talk about this a little bit later. Nate has some slides that goes into it in more detail, but the definition that we use for qualified research goes back to the Internal Revenue Code, and that definition states that qualified research doesn't include a number of activities, one of which is doing research that's funded research. Another example, we have electricity used for general lighting in a laboratory or other facility where the research is being conducted. That would be used indirectly and wouldn't qualify. An example here, you need some animals that you need to purchase to conduct research. And of course you have to feed the animals while they're being used in the research. So the feed would be an item that's consumed in qualified research activities. Sure. Yes, the question was, while the research is being performed, that's being used directly in the qualified research. What about if the animals, I guess, need to be kept around a week or so before the research activity commences? Is that used directly? We were discussing that before I came over. We had that question come in, and I guess we're not sure at this point whether it's used. One of the things with feed, you'd have the question that you can always buy feed in bulk and make allocations between what might be exempt and what's not. When you look at the machine and processing equipment part of the exemption, exclusively means only 95%. So if you had a cage or something to use to store them prior to the research, I guess if you used it, if that time was less than 5%, it wouldn't present a problem. But we didn't, I guess, have an answer. It might be something we're going to have to, like I said, we were just discussing this, go back and run it by her internally and get some other people involved, and then maybe publish a more definitive answer later, at a later date. Okay. Now the other exemption that we have is for companies that raise animals. I know in the past year I fielded a number of phone calls, and there seems to be some confusion with this exemption. I've taken a lot of calls with companies that seem to believe that they need to become certified as a biotechnology company so they can then purchase their equipment without tax, and that's not true. But I'll get back to that. This exemption, if you're a business that raises laboratory animals and you sell more than 50% of your laboratory animals to biotechnology businesses, government agencies, or colleges and universities, then you get an exemption for machines and processing equipment. It's very similar to the other exemption. Fuel, electricity, medicine, semen, feed, cages, and other items that they use or consume in raising these animals. One of the requirements is that they sell to businesses that are called biotechnology businesses, and that's a defined term in the statute. And what it means is it's basically a company that its primary activity is biotechnology, but it has to be certified by the Department of Revenue. So we have this job of certifying them. And that's where some of the confusion has come in, that they see that term biotechnology business and they need to get certified, and they feel that they need to get certified so they can claim their exemption. That's not what it's for. They need to get certified so they can then tell the company that they purchased the animals from how they're using those animals, so they can keep track of and make the determination, do they qualify for their sales and use tax exemption?
Sorry, I just wanted to make a quick comment. With respect to the certification process, I just want to clarify that it coincides with your federal tax year. So my understanding of the statute is that businesses have to be certified every year as a qualified biotechnology business from this perspective. So I just wanted to make that clarification just so everybody's clear on that.
Okay, and I think I'd have to clarify one thing there. We're required to certify the companies, but we're given the freedom to do it in a manner that we want. Currently, when we started out, we did require that they be certified annually, but it's not a statutory requirement. And I know we've had some issues with companies getting certified, so right now we're kind of looking at that process and maybe determine, do we need to change it, make it easier, or whatever, to get a little better compliance. Probably one of the big issues for both the sales tax exemption and the exemption for qualified, the qualified research credits is what is qualified research. And in a setting like this, I guess it's kind of difficult to talk about it. This is one of the most complex issues I've had to deal with as a person who's been involved in tax administration. It's a challenge just to read, the Internal Revenue Code, work your way through all the regulations, and then Wisconsin kind of adds some of its own twists with some additional credits, and then we sort of piggyback these sales tax exemptions on top of something that was really designed in the first place to be an income tax credit, and sometimes those things they're convenient, but they don't always work out that well. But this is the main issue. Now, we do reference the definition of qualified research in the Internal Revenue Code in the section cited. And within that definition, there are numerous tests that you need to meet to be qualified research, and even once you meet all those tests, there's a number of exclusions that might apply to say, well, even if you meet all those tests, if you also meet one of these other conditions, well, just kind of forget about it. You're not doing qualified research. The main one here, I think that might affect some of you, is funded research. If you're, the way we have the sales tax definition set up, you could be a company that basically performs research. You could do it as contract for other people, but when you get into, I need to back up here. So you're doing contract research, you're being paid to do it. Generally, your activity is not going to be considered qualified research, so you're not going to be able to claim these exemptions. I mean, that's the long and short of it. Some of the other exclusions, the qualified research, it's only qualified research if it's conducted in the United States, Puerto Rico, or a U.S. territory. So if the research is being conducted in Canada, for example, you wouldn't get a research credit, and you wouldn't be able to qualify for the sales and use tax exemptions. That's probably not a big thing, because in most cases, if you were doing research in another country or even in another state, if you were buying it from a Wisconsin company, they're probably just going to ship it to you in the other state, and it wouldn't be subject to Wisconsin sales tax in the first place.
Hey, Bob, can I just make a quick comment on funded research? what Bob stated is correct. That's the general rule, but there are some nuances to the code that you have to keep in mind when you're evaluating funded versus non-funded research. There's really two key criteria that are used to determine whether or not the research that you're performing is funded. One of which is, do you retain economic risk for the research that you're performing? And a lot of that analysis is based on the type of arrangement that is set up, whether it's a time and material basis, a cost plus arrangement, a fixed fee. And there are certain factors you look at in determining who retains economic risk. If there's milestone-based payments is another factor. And there's a key case that came out not too long ago. It's called the Fairchild case. This case is basically viewed as the case which sets forth the judicial doctrine by which this analysis is determined. The second criteria is, does the company retain the rights to the research? And again, we look to the terms of the contractual arrangements between you and whoever you're performing research on behalf of as to whether or not you retain the rights to the intellectual property that is developed as a byproduct of the research you're performing, whether or not you have to license that intellectual property back from whoever you've contracted with to perform the research. And there's a critical case, it's the United Stationers case that at the federal level has set forth the judicial doctrine by which we performed this sort of analysis to make this determination. So while there is a general rule in place with respect to funded research, a lot of it is determined by a contractual analysis of the terms and the agreement between you and the company you're performing research for.
Yeah, thanks, Mike. And to follow up on what Mike said, if this isn't complicated enough, if you were in that situation and you're looking at buying machinery, equipment that you have, again, with that exclusive use requirement, if you're doing a number of research projects, you may very well, it might be funded or something, but as Mike said, when you look at some of the details, maybe it still qualifies. And so you are carrying on some qualified research, but for the sales tax, the requirement is it has to be exclusively used, and that means at least 95%. So if you're using the same equipment over a period of time for multiple projects, some are funded that don't qualify, other ones do, you still might fall short with that exclusive use requirement. It does require 95% exclusive use in qualified research. One other thing to point out with the sales and use tax exemptions, if you buy machinery and equipment that is exempt because it is used exclusively directly in qualified research, the repair services for that property are also exempt. We do have an imposition statute that generally imposes tax for services performed to inspect, repair, or maintain tangible personal property. But that imposition contains an exclusion, which basically says, well, if the service is being performed to property that I'm able to buy exempt from tax, then the tax doesn't apply on the tax on the service. So basically, if you've got exempt equipment, you can get it serviced and repaired without sales tax as well. I have an example here, kind of a laboratory setting. Taxpayer has a scale. They use it to, weigh certain things that they need to do as part of their research activity. And periodically, they need to have those scales calibrated, tested, make sure they're weighing accurately. And since this is a scale that's used exclusively and directly in qualified research, they're able to buy it exempt from tax, and the charges to calibrate or inspect and calibrate the scale would also be, they're not subject to tax. And you would need to furnish an exemption certificate to the service provider, basically because the service provider doesn't know how you're using that property. And their job is, I'm going out, I'm servicing tangible personal property. Generally, I have to charge the sales tax. So you have to tell them that, you don't have to pay the tax for that service in this case. And I think that's it for me. Does anyone have any questions at this point for me? this point, we'll turn it over to Nate, and we'll start discussing the income and franchise tax credits.